Hello students, in today's session let us learn about the subsuming of taxes under GST. This is the fifth module of our course GST. Now what is the meaning of subsuming of taxes? I hope that you agree with me that the meaning is merging of taxes. In simple terms, we can say that introducing GST has helped to merge the different indirect taxes which were prevailing in our country. The system of dealing with different indirect taxes has complicated the procedure of levy for indirect tax. Now let us look at 4 different types of indirect taxes which were prevailing in our country before introducing GST. Now let me tell you the topics I will cover in this video. 4 topics, namely excise duty, service tax, value added tax or VAT, and central sales tax or CST are going to be explained in detail. Thus, we will understand the complexities involved with the levy of these main indirect taxes and the cascading effect of taxation. There were other indirect taxes also levied before introducing GST, but all of those indirect taxes are not explained here. Only the 4 main indirect taxes are explained to give you the meaning of the title for this module, as we need for merging indirect taxes through GST. I hope that you will find this session interesting. Let us start with the features of indirect tax system in our country. We know that there are different types of taxes, namely direct and indirect taxes. Direct taxes are levied directly on the income earned, but indirect taxes are charged indirectly to the expenditure. Actually, the indirect taxes are charged to the seller of goods or the provider of services, but in reality indirect taxes are shifted to the ultimate consumer. Actually, it is the ultimate consumer paying the indirect tax. I hope you got the equation correct. Indirect tax is charged on the person making the sale or providing services, but they can recover the indirect tax from the buyer or service recipient. Many indirect taxes were levied in India by the central government and state governments. These indirect taxes are levied on the manufacture, sale, import and even purchase of goods and services. Let us go into the details of 4 indirect taxes we will discuss in this module, namely excise duty, service tax, value added tax or VAT and central sales tax or CST. Central excise duty is an indirect tax levied on the goods manufactured in India. This tax is administered by the central government. The duty is levied in terms of the Central Excise Act 1944. The rates of duty or specific rates are prescribed under Schedule 1 and 2 of the Central Excise Tariff Act 1985. Whenever and wherever goods are manufactured in our country, excise duty is levied. Now, what was the procedure of collecting excise duty? The assessee himself or herself assesses his or her tax liability and files the tax returns. The department will scrutinize the information submitted by the assessee and conducts selective audit wherever needed to check the correctness of the excise duty paid. When we check the rates of excise duty charged on goods manufactured, the average rate charged was 12.5%. But if we check the rate of tobacco and the excise duty charge was 360%. Excise duty was one of the major sources of revenue for the Indian government before the introduction of the Goods and Services Tax or GST in 2017. During British rule, excise duty was imposed on a few essential goods such as salt, textiles and alcohol. The salt tax imposed under the British rule led to significant protests, including Mahatma Gandhi's famous Dandi March in 1930. After independence, the Central Excise and Salt Tax 1944 became the primary legislation governing excise duties in India. The government expanded the scope of excise duty to include various manufactured goods. In 1975, the government introduced the MOD VAT, that is Modified Value Added Tax scheme, to provide tax credit on inputs, reducing tax cascading. The excise duty structure saw multiple rates based on product categories. The economic liberalization of 1991 led to rationalization of excise duties to boost industrial growth. The CEN-VAT, that is Central Value Added Tax scheme, replaced MOD-VAT in 2000, making the tax credit system more efficient. The introduction of Goods and Services Tax or GST on July 1, 2017 subsumed central excise duty for most goods. However, excise duty continued to be levied on specific products like petroleum, liquor and tobacco, which were kept outside the GST framework. Now, let us talk about the service tax. If excise duty is charged on goods manufactured, service tax is levied on the service providers, but the service providers will charge the duty on the ultimate consumers. Just like excise duty, service tax is also levied by the central government. Service tax was introduced in the Finance Act 1994 and was applicable to all service providers except those specifically exempted. The tax was ultimately borne by the consumer, while the service provider acted as a collecting agent for the government. Service tax was first introduced on 3 services, namely telephone services, non-life insurance services and stockbroker services. But the items coming under the service tax gradually increased to 119 services. Tax collected from service tax over the years also increased over the years. It is interesting to know that in the financial year 2016-17, the tax collected from service tax was rupees 2,31,000 crore, which was 14% of the total tax collected by the central government. The next indirect tax was the value added tax or VAT. The 2 types of indirect taxes we learned now are excise duty and service tax. Both the taxes are levied by the central government. Now, we will discuss about the value added tax or VAT, which is levied by the respective state governments. Value added tax or VAT is an indirect tax levied on the value added at each stage of production and distribution of goods. It is a multi-stage tax collected at every point where value is added to a product from manufacturers to wholesalers to retailers. The tax burden is ultimately borne by the final consumer. VAT is introduced as replacing the service tax. It is applicable for intra-state transactions. Just like the GST rates for different commodities, goods were categorized under different VAT rates by each state. VAT registration was compulsory for dealers. Similarly, input tax credit was also allowed to reduce the tax burden. Now, let us look at the limitations of VAT. The first limitation is that the different state governments charged different VAT rates, so the complexity of implementing the administration were difficult. The second limitation was some of the input tax credit paid by the dealers were difficult to claim. Hence, it created cascading effect which mainly led to the introduction of GST in our country. The third limitation of VAT was it was not allowed for interstate transactions, thereby central sales tax or CST was applicable. Now, let us talk about the central sales tax or CST, which is the fourth type of indirect tax introduced in this module. We have mentioned one limitation of VAT, that it is not levied for interstate transfer of goods. Central sales tax was levied on the interstate transfer of goods. This tax is levied and collected by the central government. This tax is governed by the Central Sales Tax Act 1956. The revenue collected was transferred to the state government where the sale originated. The other features of central sales tax are it is origin based tax and it was charged as a percentage of the commodity's sales price. The administration of the central sales tax was with the respective state governments where the sale originated. But the central sales tax or CST had some limitations, like businesses preferred to buy from their respective states as there was no input tax credit mechanism like GST. This resulted in cascading effect and also increased the overall tax burden. Moreover, different states charge different rates. So, the administration of the CST was difficult. Thus, when we look at the different indirect taxes administered in our country and their complexities, limitations, revenue sharing issues, etc., it has led to the introduction of GST, subsuming all indirect taxes existed in India and replacing it with a one nation, one tax or GST. I hope you got a good insight on the topic subsuming of taxes under GST. Thank you for your patient listening. Happy learning. Until we meet with the next module.